Start with what actually happened today in the altcoin market. Aster, the native token for a perps DEX, is up nearly 10% over 24 hours. That's not a normal day. That's a top 50 outperform. That's catching some serious bids. Behind Aster, you've got Hyperliquid up 8.9%, World Liberty Financial up 7.6%, and across the broader altcoin sector you've got Hedera, Zcash, and Toncoin all posting gains over 5%. That's coordinated upside. That's not random. But here's the critical context. This bounce happened after a hit from macroeconomic data. The US labor market printed stronger than expected, 130,000 jobs added in January. That's actually a bullish economic number. Sounds good for risk assets, right? Wrong. The market hated it. Why? Because a strong labor market means the Federal Reserve has no reason to cut interest rates. Rate cuts mean cheaper money, which usually means crypto rallies. No rate cuts mean tight money, and that makes crypto struggle. So, the narrative should be, strong jobs report means no rate cuts, which should mean crypto weakness, but the market bounced anyway. That's the disconnect you need to pay attention to. The odds of a 25 basis point rate cut happening before July just dropped to 33%, down 7% from Tuesday. Traders are now pricing in that the Fed is staying higher for longer. That should be crushing altcoins. But altcoins are bouncing. This is a classic market behavior. When bad news hits, the market first sells off hard in panic. Then, once panic exhaustion sets in, there's a relief rally. That relief rally feels like a reversal. It looks like recovery. It gets everyone excited about buying the dip. But it's not a reversal yet. It's a bounce. It's the market taking a breath before deciding which direction it's actually going. This is where things get interesting, and honestly, where most traders miss the signal completely. Let's look at what prediction markets are actually showing about trader sentiment. On Myriad Prediction Market, users are putting a 57% probability that Bitcoin's next move takes it down to $55,000 rather than up to $84,000. That's not optimism, that's terror. More than half of tracked traders think the next major move is downward by nearly 30%. Think about what that means. The market is bouncing up today. Altcoins are catching bids, charts are looking better, and the traders putting money behind their conviction are saying, this bounce is going to fail, Bitcoin is going to $55,000. That's a bearish divergence. That's prices moving up while sentiment stays down. That's a trap setup. And it's not just Bitcoin. Hyperliquid, one of the top gainers today, up almost 9%, has even worse sentiment. Myriad traders are assigning over 65% probability that hype goes to $26 rather than $41. That's down from $41. That's the next move the market expects. And yeah, 2/3 of traders are betting on it. Here's what that tells you. Hyperliquid traders are buying the bounce, but they don't believe in it. They're trading the short-term upside while positioning for the downside. They're not converting conviction into buying. They're taking relief rally profits while they can. This is classic market psychology during uncertain times. Price bounces, everyone gets excited, but serious traders know the bounce is temporary, so they're selling into it, taking profits, and waiting to short at higher levels. That's what 65% hype to $26 probability means. It means the smart money knows this bounce isn't sustained. Tim Sun, senior research analyst at Hashkey Group, told Decrypt something that probably didn't make it into the mainstream headlines. The market has not yet seen a structural trend reversal. Let me repeat that because it's crucial. Not yet. The bounce exists. The relief is real, but the trend hasn't changed. Sun explained that even though the market bounced, sentiment remains fragile. The downside risk is still there. But here's the part that matters. On-chain data and capital flows suggest that buying support is strengthening. That's the hopeful signal underneath the caution. What does that mean practically? It means institutions and smart money are starting to accumulate again. They're placing bids, they're building positions, but it's slow, it's grinding, it's not explosive. Sun described this as a grueling bottoming out phase. That's not poetic language, that's technical language for a specific market condition. The market is slowly finding a bottom by testing support levels repeatedly, shaking out weak hands, grinding out long accumulation, and waiting for conviction to build. During a bottoming out phase, you can have multiple bounces, you can have relief rallies that look like reversals, you can have days like today where altcoins are up 10%, and it feels like recovery is starting. But those bounces are part of the process of bottoming, not the start of the reversal. Think of it like climbing out of a hole. You're at the bottom, you're trying to climb out, but you keep slipping back down. Each time you slip, you climb again. Eventually you get out. But during the process of climbing, you have ups and downs. The ups aren't reversals. They're just temporary progress before the next slip. That's the grueling bottoming out phase. That's where the market is. That's why experts are cautiously optimistic about the process while remaining skeptical about the timeline. The crypto market cap did bounce 1.4% to $2.39 trillion. That's real. But it's 1.4%, not 14%. It's not the explosive move that signals trend reversal. It's the incremental move that signals the bottom might be in process. Sun mentions something important. As the market enters a grueling bottoming out phase, downside potential and volatility begin to converge. That's technical language that matters. What it means, the market is slowly running out of room to fall. The buyers are getting more aggressive at lower prices. The sellers are getting exhausted. The trading range tightens. Volatility compresses. In a compressed volatility environment, the big explosive moves get smaller. The panic selling gets less intense. The relief rallies get smaller too. You get chop, you get grinding, you get boring. But here's the advantage. Once volatility compresses to historically low levels, the next move tends to be explosive. The market can't stay compressed forever. Eventually, all that tension releases. So if we're truly in a bottoming out phase with converging downside and volatility, what that means is the biggest moves are still coming, but they're not coming until the compression is over. That's why experts aren't celebrating today's bounce. That's why sentiment data shows traders are still bearish despite the green candles. The market is going through a necessary process before the real move starts. The Aster gains, the Hyperliquid bounce, the relief rally, those are part of the bottoming process, not the start of the rally. The next major catalyst is Friday's inflation print. That's when the market will get official data on whether inflation is cooling or still sticky. If inflation cools, that strengthens the case for rate cuts. That's bullish for crypto. If inflation is hot, that gives the Fed cover to stay higher for longer. That's bearish for crypto. Right now the market is priced for no rate cuts until later in the year, maybe not at all in the first half. That's conservative. That's not pricing in cuts. But inflation data on Friday could change that narrative in one trading session. That's the event risk hanging over the market right now. So when experts say sentiment is fragile and downside risk remains, they're partly talking about the inflation print. The market is vulnerable to bad news. A hot inflation number could knock this bounce down immediately. A cold inflation number could turn the bounce into a real reversal. We're at an inflection point. The next data point matters more than the current bounce. If you're understanding the difference between bounces and reversals, if you're learning to read sentiment data critically, you need to like this video right now. It helps us reach more traders who want to understand what's actually happening instead of just chasing green candles. Plus, share this video with other people watching this bounce and wondering if it's the bottom. They need to hear what the experts are actually saying before they FOMO into the rally. So practically, what do you do with this information? First, don't mistake a bounce for a reversal. The bounce is real, the gains are real, but the trend hasn't changed yet. Experts are still warning about downside potential. Second, watch the Friday inflation print like it's the most important economic number of the month, because in crypto, at this moment, it is. That print could determine whether the bounce continues or gets reversed. Third, if you're holding altcoins that bounce today, understand that traders are bearish on them despite the price movement. Hyperliquid traders expect it to drop to $26. That doesn't mean it will, but it means when you sell, know that most smart money isn't as bullish as the chart looks. 4. This grueling bottoming out phase could take weeks. It's not a fast process. You're not going to see a fast V-shaped recovery. You're going to see grinding accumulation, multiple bounces, multiple tests of support. Patience is going to be rewarded more than panic buying. 5th, keep an eye on on-chain data and capital flows. Those are the actual signals of whether buying support is truly strengthening, or if this is just a temporary relief rally. Price bouncing is one signal, but capital actually flowing in is a different signal. This bounce could be the start of something bigger, or it could be a trap before the next leg down. The data suggests we'll know more after Friday's inflation print. Thank you for watching this breakdown. Most crypto content celebrates green candles without questioning the narrative underneath. We're doing the opposite. We're looking at the charts and the sentiment and the expert analysis and the macro catalysts. That's how you actually understand markets. The altcoin bounce is real, but structural trend reversal remains elusive. That gap between the two is where actual trading opportunities are. If you want to stay ahead of these inflection points, if you want to know what the data is actually saying before mainstream media catches on, stay subscribed. We're tracking sentiment, analyzing expert commentary, and breaking down macroeconomic catalysts that move crypto markets. Check out the other videos on TJ Crypto World. We've got deep dives on sentiment analysis, macroeconomic effects on crypto, bottoming patterns, and everything else you need to understand market structure instead of just following price. I appreciate you watching, I appreciate the community, and I'll see you in the next breakdown.